morning. Thank you so much for joining us today on this post-election webinar with Connective. As you know, my name's Daniel O. I'm Group Legal Counsel at Connective. I'm joined by Mark Harron, Executive Director at Connective. He's also the Vice Chair of the Combined Industry Forum and the President of the Aggregators Forum with the MFAA. So look, really appreciate everyone's valuable time today in joining us. What we're looking to cover is just to give you a quick recap of the result of that little event that happened on Saturday and what it means for us and the mortgage broking industry. What's next? What's down the road? We'll try and answer some of the questions that people have sent in or are in the process of sending in to us as we speak, and what else is happening in the industry that's going to impact our mortgage brokers in the short term and maybe a few years down the track. So firstly, look, I think it was a great result on Saturday, and look, I just think my first initial thought is just what a wonderful result for the industry that has really banded together after the Royal Commission came out in earlier this year. I mean, all the efforts of the MFAA with their advertising and their education campaign. I haven't seen a lot of you, Mark, in the office because I know you've been flying around the country, you know, meeting with politicians, secret meetings in Canberra, you know, attending these town halls with pollies where we're really trying to educate everyone. Our mortgage brokers, I know the massive efforts our brokers have done, whether it's been on social media, just educating your customers as to why the broking industry is so important to Australians or campaigning your local member. I think all those efforts, aggregators binding, you know, working together, just to educate everyone. Look, I think it's just been a massive amount of work. It's great to see the industry united. And look, Mark, tell me what happened on Saturday. I missed the news.
Yeah, so I don't think anyone really missed that. It was quite it was a pleasant surprise. I guess it was sort of what we were hoping for in our best case scenario. And that's not to take anything away from Labor and you know, with their importance, but the bottom line is there was a fundamental difference between the Liberal policies around mortgage brokers and the Labor policies. So from an industry perspective, from a mortgage broker perspective, having the Liberals winning this election, knowing that for the next 3 years they've adopted the policy in regards to the Royal Commission report that they will not be banning a trial commission, which was the fundamental difference between where Labor and Liberal had landed. It maintains the industry in the current format that it is. So although with the Labor policy where we would have got an all up front, and technically speaking, possibly it would have been the same amount of remuneration, potentially, still to be worked through, but not having to make those changes, not having to have that disruption is rather useful and really important from an industry perspective. So it really stops a lot of that disruption, which, you know, obviously we're very pleased about.
I mean, it must be pleasing, Mark, that, you know, I mean, I know Connective, we've been we haven't, you know, favoured one side or the other, but we've actively reached out to both sides of politics.
Yes.
One side was a whole lot more engaged than the other side.
Yeah, definitely, and that's the other aspect too, is that, you know, we largely had it under control with, from a Connective point of view, in terms of our relationship with the Liberal Party. They understood where we're at. And I've got to say, you know, a lot of people in the industry contributed significantly to that and contributed to that engagement and that involvement, you know, at the Prime Minister level, at the Treasurer level, and certainly also with Stuart Robert at the Assistant Treasurer level as well. So there's a very good understanding there.
Yep.
Labor, yes, we had started to get some good interaction with them. And what will be important is that, and we'll talk a little bit more about what we're going to be doing going next, but this will continue, certainly from a Connective perspective, and I believe continue in the mainstream from an industry perspective.
Yeah, so look, I think turning on, I mean, you've touched on about the Royal Commission a bit.
Yep.
You know, both sides of politics have said broadly that they're planning to implement most of Commissioner Haynes' recommendations. So with the coalition victory, where's that leave the Royal Commission and those recommendations Haynes put forward? Yeah,
well, look, it's going to be interesting because, as we know, the current government, the Liberal Party, were not in favour of a Royal Commission initially. In fact, 26 times, according to Labor, they said they didn't want to do it. But it eventually came to fruition. There's 76 recommendations. From a Liberal perspective, there are 2 relating to mortgage brokers in that a customer paid fee for service and the removal of trial commission that they've said we will take action on them. The action we will take is that we're not going to implement them, but then there's a whole range of other requirements to be implemented. And I guess a key one from our industry perspective is the best interest duty.
Yep.
So this is where we've still got a lot of work to do, and why we will still be having people working for us as consultants from a lobbying perspective in Canberra to ensure that that best interest duty plays out in a way that continues to protect the structure of the industry, the important things, the things that lead to good customer outcomes, and the things that deliver competition in the market. And when we look at a mortgage, for most households in Australia, it's the biggest expense that they have on their monthly budgets. So it's really important that we think that the work that mortgage brokers do, the competition we bring, that it's crucial to Australia and to the Australian economy. So we want to continue to reinforce that and that importance. And if we get too onerous a best interest duty, it could lead to significant impacts on mortgage broking and the mortgage broking industry. Not necessarily initially, but in the longer term perspective, in that brokers being liable for advice, we've got to make sure that that advice that they may be liable for, it should be in a careful and proper manner that it's introduced.
Yeah, no, look, absolutely. And look, that's the theme I just want to work through a bit more with you, Mark. Obviously, from my perspective, the best interest duty as set out in FOFA, the Financial Advisors Standard, is obviously not appropriate. And it's really important that we educate the policymakers that mortgage brokers are very different from financial advisors, and I think you need a very bespoke set of rules as such. Now, I know the SIF's working at something. Yep. Can you talk a bit more about what the SIF's doing in this regard? Mate?
Yeah, well, look, we started work on this from within the Combined Industry Reform. So just stepping back on that, I know most of you understand, but just to keep you up to date, the Combined Industry Reform came about off the back of the ASIC remuneration review and the Stephen Sedgwick report into retail banking, which was commissioned by the Australian Banking Association. So it came to look at the recommendation out of those reports and say, how do we provide those and make the changes that are necessary in that respect. It also was about getting those changes and starting to make those changes now, as opposed to waiting till a government tells us what we're going to get. So trying to affect that change. So in some respects, a lot of the work that we did from a customer first duty, which is what we developed within the SIF, has been looked at by Treasury, and to the extent that they sort of like the work that we've done to date. Yes. And there's been a further best interest duty stream within the SIF that's been helping develop that and starting to put together some of the protocols around that. And look, there's a question that we'll sort of cover off on this down the track, but all the work the SIF does, it's always very well intentioned, but unfortunately, dealing with competition law is an issue that we can't develop very strict standards that sit right across an industry. And we've learnt that from in terms of how the upfront commission has played out, and how not all lenders are equal in that respect, and it's creating a lender choice conflict. But there's some work that we'll be doing from a Connective point of view to look at how we sort of address that. And I'll talk to that a bit later on. But certainly the SIF is going to be crucial. There's already things, so as an example, some of the other things that the Royal Commission recommends is the banning of volume-based commissions and bonuses. Well, the SIF has already brought those things into play and put those in place. So the government there's some of the recommendations from the Royal Commission and some of the policy that the government needs to put in place. The government can say, well, this is great, this is ticked off, but what they do is they'll formalise it through a package of reforms. The great thing is, from an industry perspective, we can put our hand on our heart and say, we're already ahead of the curve on those things. Yeah,
I mean, another interesting one, as you touch on, continuing that line, is around clawbacks, obviously. And there were two kind of key comments that Commissioner Hayne made about clawbacks. One is the limit on 2 years, which I don't actually think there are any clawback periods that are longer than 2 years.
Not that I can think of.
But the more important one is obviously preventing a broker passing on the cost of any clawback to its customers.
Yeah.
I don't know if you've got further thoughts at this stage, Mark.
Yeah, to talk to that. So look, that will come in and that will happen. So for brokers, we completely understand where sometimes brokers feel hard done by when a customer does a backflip on something and then all of a sudden they're getting clawed back on it. Now,
especially the broker's. It's not the broker's fault, or they've
No,
had
that's right.
anything to do with it.
So I think in that respect, moving forward and tackling this one from a broker perspective, there's a couple of things you should be looking to do there. First of all, really understanding the customer's position and trying to ascertain that they are going to be needing that loan and not going to be changing that loan necessarily within a 2-year period.
Yep.
If they are, then you may have to consider charging them a fee to balance out the cost of what you'll have to get clawed back on. We want to work more closely with some of the lenders too in terms of the structure and the nature by which clawbacks are applied, and make sure it is fair and reasonable.
Indeed.
Ultimately though, when you look at a clawback, it's not a penalty, that's not set out as a penalty to a broker for doing the wrong thing. It's not the case at all. It is just the bank saying, well, we've paid out this money,
Yep.
we haven't made money,
We're
we
actually
want that
gonna
money,
lose money.
we want that
Actually,
money
yeah,
back. So it's
yeah.
just a way of dealing with it.
Yeah.
Should brokers have the same right to do things? I think it becomes more of a case of charging a fee where appropriate,
Yeah.
or having a fee in there and maybe having it as a deferred fee, that you
Or a
then-
refundable fee.
refundable
Yeah,
fee that
yeah.
you can, so you can refund it after 2 years or charge it. But it's only really appropriate when you know that the customer may be in a position that is going to happen. But there's all kinds of things that happen, and you just never know what's going to happen with your customer and what's going, where it goes from there. But hopefully, if the customer's in a position where they have to sell the house or pay back the loan within a very short space of time,
Yep.
that there's further transactions that they want to do with you.
Yeah.
I mean, it happens. People get divorced. People get
There's
sick.
unforeseen circumstances.
Things
that
happen. Yeah.
Yep.
I pity the poor broker that might have done the loan on our neighbour's place across the road. They've only been in the place for 6 months and it's been sold back on the market again. Apparently there was a marriage breakup there. So at least it's an everyday occurrence, but we need to make sure it's fair and equitable. Yeah.
Absolutely. Look, I think, let's just touch on a few other of the policy promises from the coalition government. Obviously, not the political commentator in me, Labor, obviously, one of their criticisms is they had a very expansive policy, suite that they presented, but at least there's no more negative gearing changes, none of the capital gains stuff. But, some of the policy things that the coalition, for example, they've talked about the first home loan deposit scheme, which they're obviously trying to assist first home buyers with that, from having to take out LMI insurance when they've got a slightly higher LVR. I know the government have come out and encouraged and said that they're going to work with smaller lenders and non-bank lenders, which is extremely positive. And obviously, it adds to the great work mortgage brokers do with first home buyers. What else?
Well, and that's it specifically. So there's some bands in there in terms of single incomes.
Correct.
Under 125,000, joint incomes under 200,000 for couples.
Exactly.
So that kicks in 1 January. That's so hopefully that stimulates a bit more of the market.
Indeed.
Look, listen to economic commentators, and I know we got some feedback on our Westpac update yesterday. There is a firm belief that there will be more of an increase in owner-occupied purchases as opposed to investment purchases in the near term. But I think that the investor market will come back, and we'll talk a little bit about some macro policy changes that are happening from the regulators, less so the government.
Yep.
The other key things, and tax cuts for small businesses. So
Absolutely.
This is again for most of the brokers. This is may suit you personally, but small and mid-sized businesses they get a boost under the Liberals. There's tax cuts coming through, so the business tax rate goes from 30% to 27.5% for small businesses earning less than $50 million.
Yep.
There's also provided assurance that the rate will be lowered to a further 25%. Don't know what the time frame for that will be. Hopefully it happens within this first term.
A few crossbench senators they may have to work with on those, right? But
yeah, that is true. And there's some also instant asset write-offs. They plan to extend the instant asset write-off for equipment and other things under $30,000. So hopefully that comes through, and that's going to be quite useful. These are things you can look to tell your customers, particularly small business customers, and obviously help them in terms of an asset finance transaction if necessary.
At least just stimulate a bit of that flow of capital around the economy again.
Yeah, well, let's hope. Everyone sort of puts everything on hold when there's an election on. Oh, we're waiting to see what happens after the election. Well,
yeah.
We know that's done. Let's get on with the business now.
Indeed. So, all right, that's a nice segue into. Let's talk about what's next. So what's Connective going to do over the short and medium term future?
Yeah. Well, we still see that there's a significant amount of work to be done from this perspective. While we don't have significant structural changes to remuneration to contend with and have to deal with, it enables us to probably focus more of our attention on the best interest duty and other policies coming through. Now, the time frame for getting that done, we don't exactly know. We'll work through that in some way, shape or form as the government sort of forms, as they start to inform Treasury and what the time frame is from their perspective to have a lot of these things done.
Yep.
We'll work through that. We will continue to engage. In fact, what we've learned through the process of the Royal Commission and engagement with politicians and has been that it's something that we now need to make sure we're doing on a regular basis.
Yep.
From a Connective point of view.
Yeah.
That we will be doing this so in preparation for as we get into the next election structure.
Yep.
So what will happen in terms of the implementation schedule, I think, for the Royal Commission structures will depend to a certain extent on how much the opposition, i.e. Labor, position this and argue for those immediate action on those things.
Yep.
And how much of a point they want to raise with that.
Yeah.
Now, in some respects, that will probably, even if Labor, under a new leadership structure, sort of go a little bit softer on that.
Yep.
I don't know that the Greens will. And let's face it, and the Greens are sort of, Labor has to sort of kind of do what the Greens really want done, because without the Greens' preference votes, Labor they need those to get in through to the next election. So they'll be working hand in glove, and that, again, to your point, we'll see what happens through the Senate.
Yeah.
So there will still be a little bit of work to be doing across benches, even though we have a strong partisan Senate to a certain extent. It'll be crucial that we don't want little nuances put into a best interest duty legislation that is not going to be good for our industry and not good for customer outcomes. I mean, the worst thing we could have now is a best interest duty that stifles or reduces the desire for banks and mortgage brokers to help customers borrow money.
Exactly.
We need to sort of get that economy going a bit more again. So there's some of the key things we'll be doing around that. Obviously, we'll be talking and updating brokers on a regular basis. We'll be forming some sort of working groups with brokers as well, and working a little bit more with brokers as we start to develop out a little bit more of the structure of what the best interest duty looks like.
Yes.
There'll be a lot of opportunity for feedback in that respect. So again, time frame we don't know, but with any of this type of legislation, it does go through a process whereby everyone gets to have a look at it first, and then it actually potentially goes for a redraft. Yep. Then it will come back out again, and that's when it has a public airing. And so they put our policies out, and then it's Treasury allow for public submissions in respect to that. So we'll have another bite at it then if necessary. But there's sort of some of the key things where we're at the moment.
Yeah, I mean, it's really interesting, right? Obviously, and whether we see Labor trying to pick up Haynes' report and go, look, this is the Royal Commission we had to have. Yep. Look at these recommendations.
What are you doing about it?
Yeah, what are you doing? Are you going to implement the remuneration changes as such? Now, from my perspective, I'm really hoping that, the coalition now has a majority in the lower house. They've run on a platform where they say, we're not touching mortgage broker remuneration structure one bit. We'll come back in 3 years, but we're not going to touch it. I would really hope that the opposition and all the industry participants respect that policy platform that the coalition ran on, Mark.
Yeah, look, I think they will, from the point of view that even in the limited conversations we've had with them, they've understood fairly clearly how important mortgage brokers are to competition in the home loan market.
Yep.
And as I mentioned before, it's one of the biggest costs in the majority of households across Australia.
Probably the biggest financial decision most people make
That's
in their
right.
lives.
So you don't want to be sort of messing with that. And you know, from an industry perspective, if we have to put the gloves back on and go and have that fight again, we will, and we will make it another election issue and a political issue if we have to. But I get a sense that they understand that enough to know to step back from that perspective.
Awesome. And look, I think obviously we've talked about what Connective's doing. What about our brokers? What about all our brokers online at the moment? What would you say to them?
Yeah, well, look, I think one of the things that has, you just got to keep on doing this, the great work you're doing with your customers is obviously the fundamental thing. I think we've talked about this, we talked about it in the pre-election webinar, we've talked about it earlier. A couple of key things that brokers have got to be doing is making sure customers do understand how you are remunerated. Yes, it's structured in the compliance documentation that you give to them, but largely customers, discuss it with them. Make sure they understand that you get this up front, you get half that up front paid on an ongoing basis, which is called trail commission, and it's there so I can provide these services to you. Articulate those services, document them to the customer if you can as well.
Absolutely.
So that the customer goes, I know Dan's there, I can call him to sort of run these things past him. And so if this pops up again and becomes an issue again, we are even in an even better sort of frame of mind in terms of the customer perception around that remuneration, and no one's doubting the value that they get from that.
You're not a fee for no service, effectively.
That's exactly right. No, that's definitely the case. So there's some of the key things, but it's really about sort of, again, putting your customers' interests ahead of yours, which we think Connective brokers do anyway. So
absolutely right. Look, I think we must not forget that the government has said they will relook at the remuneration structure in 3 years' time, and so I think it's absolutely critical that, and with the best interest duty possibly coming in, that the brokers continue to serve their consumers as best they can, and they have in the past already. So.
And that's why we won't be letting up in terms of Connective's ongoing focus on working with the Combined Industry Forum, working with the industry associations, and certainly working with the policymakers through Treasury and ASIC, and obviously working with government. So just on that, Dan, there's a few of those things that are popping up. We'll talk about ASIC in a moment, because I think you had a catch up with him yesterday. But I think some of the key themes that brokers can take out of the current market is that our broker market share is still growing.
Yes.
We had the December quarter results come in at 56.8%, which is terrific. It's terrific from the point of view that it's an increase of nearly 4% on the same quarter last year. So that's where you sort of see that significant uplift through that. So I think we can all take heart on that. But it again reiterates how important mortgage broker is to competition and to the market in general. And there's a lot of other various aspects coming through in terms of other changes. We talked about it. Josh Frydenberg was out yesterday telling banks that they need to lend money again.
Indeed, loosen the wallet, right?
Well, we'll see. I think big changes that occurred with APRA announcing the potential change in their policy around the serviceability rate will have that significant impact. And in some cases, it's sort of some of the data I've seen is that it will increase borrowing capacity in certain loan scenarios, sort of quite substantially, by $50,000 to $100,000.
3 to 4% in some cases.
That's exactly right. So just in case you're not up on that policy, the current benchmark that banks use is 7.25% on every single loan or any potential loan. What has been proposed by APRA is that the benchmark is a percentage basis on top of the existing rate.
Correct.
Now, where that sits and where that will end up, that will be determined in time, but by that being the case, that assessment rate could come down, by 1.5% to 2% on average, which will lead to higher borrowing capacity.
And I think that's going to be a much bigger trigger than, for example, the 25 basis rate cut that is definitely going to happen at some stage.
Well, economists are talking about 2 more rate cuts. The challenge there is that while the rate cuts happen at that headline rate in terms of the cash rate, the official cash rate, but only about 7 to 9% of the bank's funds capital is tied up with that rate.
Correct.
Where they get their money from to lend to for home loans is from the markets, and unless the markets have factored some of those rate cuts in, I don't know. But look, it's overall, I think as we've getting back to the weekend has been a very pleasing result.
Yep.
And I'm sure it's our friends over at AFG and Mortgage Choice are pretty happy. I saw their share prices each going up by around 10%.
Indeed.
So
maybe a bit more actually. Yeah.
Yeah, probably a bit more. So, and the market itself just increased dramatically. I think we had our best. The stock market finished up at its highest level since it had since 2017. So,
Indeed.
so I think all of these sort of are playing out in a nice positive framework.
Correct.
Brokers are being seen as a very popular choice.
Yep.
And still a great mechanism to go and get a home loan from. So we really need to sort of make sure we capitalise on that.
Yep, indeed. Look, I think let's go on to some of the questions that some of our brokers have sent in. So look, just having a look at it. So look, this one I'll band these two questions together, Mark. They came from Jay and Adam. What does this mean for the future of Trail Commission? And is there a possibility of them, I assume the coalition, backflipping on Trail now? Could a review in 3 years mean we are back at square one?
Yeah. Okay. So what it means for Trail Commission is that it's intact and it's staying there. So based on the Liberals' policy in regards to the Royal Commission recommendation, is that they're not going to implement it. They're taking action, but they're not implementing that recommendation. So that means that it will be there for that period of time.
Yep. And
I would be very confident that there's going to be no backflipping from the Liberals in that respect. What happens in 3 years' time, that's the important part. So this is where, from an industry perspective, we can't just back off and say, right, we've got this, let's just cruise along. We need to be working with government, with the policymakers, to ensure that we have all of the other recommendations implemented in a good structured way, where necessary, legislated, so that hopefully we get into the 3-year term, another election, and mortgage broker remuneration, mortgage broker activity is not an election issue. We also want to have it such that all political parties fundamentally understand the importance of mortgage broker and the importance we provide to customers and to households, so that there is no question, and they're not going to sort of be targeting mortgage brokers for further action. They're sort of some of the key things that I guess we'll be focusing on. So yes, there could be some changes depending on who is in power in 3 years' time, but that's always going to be the case. So we will continue to lobby, we'll continue to educate.
Absolutely, absolutely. I mean, look, I think there's been, 4 substantial reviews in the last 2 years, all touching in some way, shape or form on mortgage brokers. So hopefully, there's a bit of broking fatigue from their perspective, and we can all just knuckle on and do what we do best.
Look, the key things we've got to do is keep our noses clean.
Correct.
And be doing the right thing by our customers and not having major issues
Those
popping up.
large examples of misconduct. Right?
That's right. We don't want to. We want to ensure that there's no significant increase in complaints and various other things.
Yep. Cool. All right. This question's come in from Mark. Will upfront change?
No more than it has to date. But that being said, it does need a slight structural adjustment to ensure that we get the balance back to the upfront commissions where...
Yeah, can you explain a bit more about that?
So where the changes have been implemented by the banks to meet the Combined Industry Forum requirements, recommendations, is structurally that has caused a lot of problems in respect to timing of those payments, means that some brokers are either out of pocket altogether, or it takes a lot longer for them to get the remuneration that they should be getting. It also means that because there's substantial differences between some banks in terms of how they do it and when they do it, it means that that becomes an issue that then in terms of bank selection, depending on the client loan scenario. So we want that removed. We want to have that tightened up, and we'll certainly be talking to Treasury about that aspect, about how do we sort of get through that, because unfortunately as an industry, if we were to use whether the Combined Industry Forum or any other forum to come together and sort of discuss and have all sort of agree on the same structure, it's anti-competitive behaviour.
The competition lawyers suddenly get a bit excited, don't they?
Despite the fact that it has significant benefits, it is we have Gilbert and Tobin lawyers sitting in every meeting for a reason, to make sure that we're not discussing things or colluding, to sort of have a structural things that are exactly the same that sort of can dampen competition. So that's where, so if there was to be changes around that, we do have a slight cloud hanging over us from the point of view that there are still the recommendations out of the Sedgwick report in terms of changing broker remuneration in terms of upfront so that it is not linked directly to loan size. From the Sedgwick report,
I think it's recommendation 18, was
yeah,
it? Or something like that.
ABA's sort of basically been told that, well, you haven't met that requirement. Now, the current government has said, we are not changing commissions. We're leaving it how they are, and we'll review it in 3 years' time.
And they've been voted in with a majority.
That's
in the
right.
lower house,
So in that respect, we'll be asking government to allow the ABA to say, you don't have to worry about the recommendation. You know, that would be the sensible thing to do.
Correct.
So hopefully we'll a little bit of work to do there as well. But you know, that's the way we see it. That's the way majority of industry sees it. So I'm sure that's the way it will play out.
I mean, it's really, just going back to the upfront commission point, it's really important to note that the genesis of that upfront commission and the changing on how it was paid, that was in response to ASIC's remuneration review and about lender conflict and removing lender conflict. It was never there to give lenders a free kick and to put a bit more coin in their pocket. Right?
No.
So we are definitely looking at that data, and if we do see lenders are getting a substantial free kick, that is a conversation we will have to have with them regarding their commission rates.
Well, we discussed it last year prior to them making the changes, we've continued to discuss, and we've got a little bit more information and data on that. So just to talk about that and that structure a little bit more than probably Dan, one of the things that, of course, that some of the banks looked at when they made those changes is the system changes required to stay on top of additional payments as loans are further drawn or funds are utilised. And going into an election where you had the scenario where there was a highly likely Labor win, and they were talking about major structural changes to broker remuneration. So a lot of banks just basically sort of understandably sat on their hands when it came to IT changes. So now they're in a position where they know, okay, we've got no major change. Let's get on with this. Let's get the Sedgwick Reform 18 out of the way, get on with it, and make the changes to the current structure that they've got so that they are all in a position to make the payments in a timely manner and to honour all payments of upfront when funds are utilised.
Yeah, absolutely.
That's what we'll be calling for.
Great, thanks, Mark. Okay, cool. We've got kind of a few questions along the same themes. Just reading from Jay, Edward and Daniel. Thanks for your questions. What can we do to start gaining some ground in the debate? What do we need to do as an industry to ensure that we are still okay after the review due to occur in 3 years? And as an industry, what will happen going forward to ensure we don't have continuing uncertainty, i.e. the next change of government? So I've kind of grouped them all together. So.
Yeah, and it sort of goes back to a comment made where we are not backing off in terms of our continued education, our continued engagement with policymakers and with politicians in Canberra on both sides. It's crucial that we have all the Labor politicians, all the senators, particularly backbench senators, the crossbench senators, understanding the importance of mortgage broking and understanding that our remuneration, how it works, and how it has huge benefits from an ongoing basis to customers. The great thing about Trial Commission, as we pointed out, and we started to get some traction on even within the Labor side of some of the Labor factions, was that people started to understand that, first of all, by deferring a lot of that up front, it meant that a small lender doesn't have a huge capital cost of having to pay an all up front at the beginning, which had an impost on their businesses. It meant that the brokers can run stronger businesses and maintain those businesses to enable ongoing service to customers.
Smoothing out their cash flows, for example.
As and when customers need it, that's it. And finally, it actually brings an accountability regime to brokers. The fact that you're not getting, if you went to anyone, this is what they're wanting to bring in terms of banking executives. They call it the BEAR regime, Banking Executive Accountability Regime, is that don't give the executives all their money when they make a huge profit, make them earn that down the track so that their decisions are not sort of one-off massive income earners from that perspective. So that's, so we see the same thing that effectively Trail has a similar methodology. So 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 we'll just keep going in terms of education and lobbying.
Fantastic. A couple more questions. This one came in from Brendan. Can we push for a position where our incomes are improved a little? Cost has definitely increased, and we need compensation.
Yeah. So we've absolutely are conscious of this. We're understanding this. We're talking to a number of brokers around this on a regular basis as well. So we are looking at making sure the banks, first of all, implement the structural changes from a system perspective to get things right. And secondly, looking back and saying, okay, you are now paying out 12%, 15% less in upfront commission than what you were same time last year. It's not all because brokers were increasing loan sizes unnecessarily. A lot of it is to do with just some pure structural things. So what needs to be done? Does the upfront payment from which that is calculated need to be reset to a higher level to compensate brokers? What needs to be done for that to occur? And that's what we're looking to do.
Fantastic.
Look, the challenge in terms of, yes, we realise that brokers seem to be doing more and more and more. A lot of that is more market conditions too. It's policy-based decisions that are driven by the regulators, not necessarily by the banks. The challenge is it's actually creating a lot more work for the banks as well. What we've got to do is get to a position where, collectively, we as brokers and the banks, it's more streamlined and we're not duplicating activities as much as possible, and then we can all save some money.
Yeah, look, and I'll touch on it a bit later, but it's also about creating efficiencies. I know from the compliance perspective, how can Connective help our brokers, comply with their requirements in a more efficient manner? Also, with the rewrite of responsible lending that's coming down the track, what areas can brokers do less work on, but we still achieve the same result from a good consumer outcome perspective.
Dan, how are we going for time? We've got time for one more question.
Yeah, one more quick question. I think this is from John. What are the plans to continue lobbying on Haynes' best interest recommendation? I know we've touched on it, but if you could just, quickly.
Yeah, so the lobbying really sort of sits with more as we develop help develop some of the policy in respect to work with Treasury from that perspective, and how that plays out. There's some good work already happening through the industry associations, making it very clear that there's a distinct difference between mortgage broking activity and financial planning activity. And this also relates to education requirements as well. So financial planners are moving down a degree qualification. Well, when you're taking people's whole life savings and investing it, and you do that poorly and you lose everything, that has huge ramifications. So it could be argued there's a higher requirement from an education. Mortgage lending is not as complex.
No, it's quite commoditised.
It is. Look, there could be certain specific qualifications needed to do different types of lending. But that's really up to lenders from that perspective that are working with brokers who do more complicated lending to say, well, we want this as a requirement as well. But overall, there's little things like that we're working through. So, a lot of work there with Treasury, a lot of work will be happening with government.
Fantastic. All right, cool. Look, I know we're running out of time. So look, Mark, what else is happening, in closing, what else is happening in the market that could be impacting our mortgage brokers? What are the real key things that they need to know about or think about in the next short term, medium term? Yeah,
look, the key things, and we touched on them briefly, and I guess we're sounding a bit like a broken record here because we're talking about this a lot this year. But really how you service your customers, the level of respect that customers have for what you do is crucial. We already see through the Momentum Intelligence reports, 96% of customers are either satisfied or very satisfied with what a broker does for them. We've got to keep that up. We've got to make sure that we don't create any room for the errors and for complaints that could create a bit of noise around our industry. We've got to keep an eye on all brokers. If you're a broker and you're concerned that another broker is not doing the right thing, then talk to the industry associations, talk to your aggregator, or talk to Connective. If they're not with us, we'll have conversations as well. But we've got to remove any, we get judged. Every industry is the same, but everyone, as I say to the politicians, every industry, including mortgage brokers, has their Fraser earnings. We really need to, you get measured by your weakest link and worst performer in some cases. So, look, obviously there's a work that we're doing with ASIC as well.
Yep.
So
Oh yeah,
you
look, there's
caught
a
up
couple
with
of things. We're obviously regularly in communication with ASIC. I think some of the key things are, obviously we lobbed in a submission on CP 309.
Yep.
ASIC are looking to rewrite their responsible lending guidelines. We put in a submission in that, and I'll come to that in an article webinar in the future. And that's really going to impact your day-to-day on how you, what is reasonable inquiries, what's reasonable verification. Yeah. The other area that we've been talking about ASIC is ASIC are starting a pilot to start collecting data, primarily from banks, but possibly from aggregators like us. And they are continuing to investigate and look into the mortgage broking industry.
Well, it's their job. Their job is to monitor. So, I think one of the things that people get concerned are these continued reviews.
Yeah.
We're going to expect that with ASIC, it will be a continuing monitoring. I mean, the deep dive reviews will happen from time to time on different things.
Correct.
But,
they've just got a watching brief. And look, I think, unfortunately, the success of the brokers means, when over 56% of all home loans are written through the broker channel, it's important and it's critical, and it's one that ASIC and APRA continue to just supervise and look into. So that data collection is going to happen, and I know they are going to do further studies into the mortgage broking industry. And I think a lot of that is just educational. I think ASIC have put up their hand and said, look, we need to know more about how this works and how the sausage is made at the end of the day.
Yeah, I think some of the big policy changes that are occurring, though, that really affect our industry. We saw the changes that APRA implemented, through over the last couple of years to banks, which really sort of, put a big handbrake on investment lending.
Or especially, the interest-only
stuff. It then sort of started to put a real, and then we had the HEM piece being reviewed. So,
correct.
So this CP 309 is looking at, HEM is looking at living expense assessment and trying to get a better understanding of that and a more standard guide.
Well, I think it's important that there is a middle ground on that, whereas there are some things that brokers should verify, some real key items, and there's some areas like discretionary expenses where I think a bit of flexibility, should be introduced in certain circumstances.
The banks need to know for sure that they are allowed to lend the money on that basis, and not be in court in 5 years' time because of some silly rule and some changes. But back on the APRA piece, the macroeconomic policies that APRA seem to have undertaken more largely have been have complicated things a little bit. Seeing APRA, I think, sort of easing off a bit in that is very, very encouraging.
Absolutely.
And hopefully will allow the banks to lend, or change the policies, lend a bit more money, and will help us as an industry do our jobs better as well. But getting back to some of those key themes about putting your customers' interests first, doing the right thing by customers, again, can't reiterate enough that it's really important that not only do you document how you're remunerated and your conflicts, policies, etc., but you walk your customer through it. You talk to them about it, make sure they understand.
Take them on the journey with you.
That's right. And then finally, explain to them that what the services are that you provide. And each broker business is slightly different, but document that and ensure that your customers have that. Stay in regular contact. That's the beauty of having Mercury and a good CRM program.
Indeed.
A bit of a plug for our direct marketing hub. If you need a bit of assistance to help you stay in contact with your customers, we've got the tools that allow you to do that. So, and talk to your broker support managers. We've got a significant team of broker support managers on the ground.
Indeed.
Whose job it is to get out there and help you improve, run your business, but also help you understand how you can diversify and maintain contact with your customers as well.
Absolutely. Fantastic. I think we're out of time now, so thank you again, Mark, for your insights and for your massive efforts, right? I know, as I said, we rarely see you in the office, and that's because you're travelling around Australia lobbying for the industry, so I appreciate the efforts in that regards. Look, as I said, it was a fantastic result on Saturday for the industry, but as Mark has said, the work has only just started. We've got to continue, we have largely advertised, shouted to the politicians and anyone that wants to listen that brokers are great for competition, and brokers drive good consumer outcomes. So let's continue working hard for our consumers and obviously backing up what we're telling everyone about the industry. So Mark Harron, thank you.
Daniel, thank you.
Appreciate everyone's time, and we'll talk to you later. Thank you.
Thank you.